And they are classified into different categories. They are classified in different categories. The first one is hazard assurance level. That is the first classification. And in this one, we have a reasonable assurance. And then we have limited assurance. Now, we are saying that we're looking at the types. So this is just the classification as at. This is just the classification, but the types are these two. So we have, these are the types. Then we have another category, which is number 2, as at attestation or assertion based. As attestation level or assertion based. In this one, we have number 1, we have direct reporting. And then we have attestation or assertion based. Attestation or assertion based. Now, let's look at these types of assurance. We say that assurance are engagements where the auditor or a practitioner needs to give a report that is intended to increase the level of confidence of the users. So the first one is called reasonable assurance. Under reasonable assurance, in this one we have a high degree of confidence level, a high confidence level, low risk. It means that the report that you're giving, which is a reasonable assurance, that is a report where the auditor is able to gather sufficient audit evidence, has got a larger scope, and the auditor's engagement is able to give a high degree of confidence, meaning that you are able to reduce, it reduces audit risk to a low acceptable level. When you do that work, you are able to reduce the audit risk to a low acceptable level, meaning that audit risk is the risk that you can give wrong contribution. So in this particular audit or assignment, you are going to do thorough work such that the audit risk becomes reduced or gets reduced to a very low level. So at the end of the day, if the audit risk is reduced too much, it means that your level of confidence or the level of dependence on that audit or report is high, and therefore high confidence level. So we are saying that this kind of report is a report that intends to reduce audit risk to a low acceptable level, a very low acceptable level, a level that you can accept to take. It is a lower level of risk that you can take as an auditor. We also have another understanding is that if, for example, you are having a student who has performed in exams, and then the student got 98%, or we say it is anything above 70 and above, 70 and above. When you're looking at the performance of the students, you'll say, I think that result is quite reasonable. It makes sense. It gives some level of confidence. That reasonable level, the level that makes sense, the level that you can, is worth discussion, is a very high level, but not 100%. If we say that is 100%, it is now beyond reasonable. If you are reasoning in such a way that people agree with you, they don't think that you are now reasonable. If everybody agrees with you, then your point is absolute. So the opposite of this reasonable or the higher level of reasonable is called absolute. So it means that if you were to get 100% a report that is 100% perfect, then that report is now absolute. It does not lie, there is no error at all, does not have risk at all. That report is absolute. But if the report is quite high in terms of the level of confidentiality, in terms of its truthfulness, but not 100%, but is quite high, we say it is reasonable level. And then we also have a situation where you have done the report, but even you as the auditor, you are not very comfortable with the report. You are not sure. You even doubt it. You are not comfortable with the report. That is called limited level of assurance. It means that you are almost 50% doubtful, 50% okay. You are 50-50. In terms of percentage, it is 50-50. It is limited level. Why is it limited? You are being limited in terms of the resources that you have. You couldn't get enough information to make decision or conclusion. So you are limited in terms of resources. You are limited in terms of scope. You are limited in terms of knowledge. So at the end of the day, you are giving a report, but you are not very sure about that report. At the end of the day, you are giving a report, but you are not very sure about that report. Therefore, you are going to give a limited level of assurance. There is a limit. There is an extent that you can depend on that report. It is called limited. So therefore, when you look at the assurance level, there are basically three. The absolute one, which is not possible. You can't give an audit report that is 100% perfect because of some inherent risk. There are things that are beyond you that you cannot know as an auditor. So you can't be 100% sure of your report. And then we have reasonable. This is where you've done a perfect job. You are able to reduce the risk or the possibility of giving a wrong conclusion to the lowest level. And then we have limited level of assurance. This is where even though you have tried to reduce the risk, you cannot reduce it to the same extent as that of reasonable. So kama hapa umereduce, if here you have reduced the risk to maybe 40% or 50%, in reasonable, you are reducing the risk to 10 or even 50%. So we are saying that at the end of the day, your intention in both cases is to reduce the risk. But in this reasonable, you have reduced it even more. But on limited, you have reduced it, but not lower than that of reasonable. You can therefore say that under limited level of assurance, this is where the auditor or the report is intended to reduce the audit risk to a lower level, but not lower than in reasonable assurance, not like the one in reasonable assurance. It is intended to reduce the risk, audit risk, but not to a lower level than that of reasonable. That of reasonable is even lower than that. It's even much lower than that. Therefore, that is what we mean by limited. Of course, I say that absolute is where there is no risk at all. It is not practical in nature. We have this kind of assurance. Now, what are some of the examples under this assurance level? Remember, audit is also an assurance engagement. Audit falls under assurance engagement. But because in audit you are expected to give a high level of confidence, in audit you are expected to give a high level of confidence. Therefore, we can say that example under this is audit of historical financial information. That is where you are supposed to give a high level of confidence. But example of this is a review engagement. So in review engagement, you are just reviewing. You are just passing through. You are not very sure. You are not going deep to get evidence. You're just passing through the report, reviewing the report. Therefore, you are not detailed. There is a possibility that the report could be having some errors, but you didn't see. Therefore, in this one, no, this one is this, and then this is this, right? So audit of historical financial statement, that is under reasonable. An example of assurance level It is still under assurance, but it falls under reasonable. This one is still under assurance, it falls under review is an example of assurance, it falls under limited. Now we have another classification or category that is now looking at engagement in terms of not review or audit. It is looking at it in terms of attestation. Attestation or assertion, the word assertion is basically belief. Assertion means belief. Yeah? So somebody saying that in court, they say that I assert, means that you are claiming or you believe that that is the position. You are asserting. Sometimes when you take fake documents, you stamp them wrongfully. We are saying that what you're doing is asserting them to be true. You are claiming that they are true. So it means that in that case, you are not able to confirm the validity. You are only claiming, you are trying to believe. Now that is called attestation, attesting, or assertion. Then we have direct reporting. Now, in these two engagements, we are now looking at the engagements in terms of who is performing, not the level of confidence or the reasonableness. We are looking at it from who is performing the engagement. Is it me or someone else? If it is someone else, they are able to perform the engagement on my behalf, and then my role is to come and check if, with the knowledge that I have, those information that are given that have been done by somebody else is true and correct. Right? So, for example, you can call me that Mr. Dennis, kindly come and check for me this particular report that I've done and give me your opinion. I'm not coming to audit. I'm coming to go through it. You are the one who has done it. Therefore, I'm going to give my report or my opinion believing that that is the correct position. I didn't confirm. I didn't have enough evidence. I depend on your report with the knowledge to give conclusion. So my experience will help me there. Therefore, I am trying to believe that what you are claiming is true. What you are trying to show me is true. You have confirmed and you are presenting the correct position. Therefore, we are saying it is attestation or assertion because you are trying to assert, you are trying to confirm to me that these are the correct position, this is the reality on the ground, so that I can make decision depending on that. That is why it is called assertion or attestation. Somebody just claimed by telling me, this is what is there, decide and make a decision. So you are just attesting or giving attestation. We have direct reporting where the practitioner directly gets involved in execution or in performing the engagement. So the auditor or practitioner directly gets involved in the execution of the engagement or performing the engagement. He gathers the information, collect the evidence, perform the execution, and do all that. So they will plan, execute, gather evidence, and then report. So it's very directly involved, and that is why the word direct. You are directly involved in the engagement. That is called direct reporting. It is not the same as this, where a third party comes, perform the work, and present to you to make decision. In this one, someone else does the work, and then you only come to make decision. That is where the examiner drives the question from here. Read what the examiner says. The examiner says that the regulatory body for professional accountants in your country has approached you to draft professional standards of practice in conduct and reporting on attestation engagement. So you want to look at how the attestation engagement is conducted and reported. Remember, it is being conducted by a third party and then reported by the practitioner. So how it is being conducted, somebody else comes and performs the work and then now you report on it. They are defining to you the attestation engagement by saying that these are engagements in which a professional accountant reports on the reliability of information, usually of a financial nature, presented by who? By one party to another. So it is somebody else who has presented to the practitioner to assist the practitioner make inference on the former. That is a good definition of attestation engagement. Now the examiner is saying, with reference to the international standard, that is ISA, and any other acceptable standards of global practice, prepare a proposal, give them proposal. Can you propose on the required standards that should be used for that practice? So they have seen the risk. They have seen the risk that somebody else does the work and present to you. Now, for us to make sure that we are going to give a good conclusion, even though the work has been done by another person, what are some of the things that you propose for professionals to follow or to make sure that they check to ensure that this attestation engagement does not give errors, does not have misstatement? So you just state the proposal. When you are told to do that, you are not going to write it in form of a letter. You're not going to write a very serious document. You're going to state what you are proposing. You can say that the practitioner should do this and this and this. That is what you are proposing. That is what they're asking for, and you get your 12 marks. Now that you understand all this, can we now come up with the proposals? What do you think should be proposed in that engagement? What can you propose in that engagement? That kind of engagement to ensure that it is conducted well and reported well. What can be your proposal? Between practitioner, the person who is going to make the decision, and the other person who has done the work, what is your proposal? What do you propose? Hi guys. The practitioner should conduct the audit himself. Now, Evans, the nature is that the practitioner must allow that person to do the work. Otherwise, if he end up conducting the audit himself, then we are not talking about presentation. We have changed it to direct reporting. We have two types. So if you decide that you're going with this, you stick to it. If you decide to conduct it, then you are now leaving your attestation. You are now going to direct reporting. So that there should be clear. But that was a good trial. It means that you are understanding what I'm saying. Hey. Let's proceed. Don't you think that the practitioner should have technical knowledge on how the audit is done? So that when they are reviewing or going through that work, he can reference, he can remember, he can see beyond, even without doing the actual work. So that is the first thing. The practitioner must. So that is a standard. For us to do this, you must be having a good knowledge as that of the person who is performing the work, so that you can be able to see beyond the figures. I want to write this. Number one, say that the practitioner must have adequate technical training. The practitioner, that is what you are proposing and should be part of the standards now for us to make it good. The practitioner must have adequate technical training and proficiency to perform the attestation engagement. You must know and have enough experience to be able to handle attestation engagement. Technical training and proficiency to perform attestation engagement. Number two, the practitioner must have adequate knowledge of the subject matter. The subject matter is the item under investigation. If you're auditing, are you auditing loans? Are you auditing bank? Are you auditing SACCOs? Are you auditing energy sector? What are you auditing? You must have a background information and knowledge about what was being audited, so that when they present to you, you can be able to reference. So you must have adequate knowledge of the subject matter. The practitioner must have a reasonable belief. He must have a reason to believe. The practitioner 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 must have a reason to believe that the subject matter is capable of evaluation or is capable of being audited. The practitioner must have a reason to believe that the subject matter is auditable or is able to be evaluated using the suitable criteria. You cannot just audit a subject matter or review a subject matter that cannot be audited. Must have a reason to believe that this thing is auditable. The next thing, the practitioner must be dependent in mind, the practitioner must be dependent in mind in relation to the subject matter, must be dependent in mental attitude or mind in relation to the subject matter. He must be independent in mental attitude or in mind, mental attitude or in mind, as far as the subject matter is concerned. The practitioner must ensure due professional care. He must ensure due professional care and apply objectivity. Must ensure due professional care and apply objectivity when evaluating or when reviewing the subject matter. The practitioner must plan. The practitioner must plan the work and properly supervise assistants in case of any. In case that work was being done by some people, needs to plan and supervise how they are carrying out the work. They must plan and properly supervise the assistants. The practitioner must ensure that there is adequate and sufficient evidence to support the conclusion. The practitioner must look at the evidence that is presented and ensure that they are sufficient or adequate to support the conclusion that they are going to come up with. Because at the end of the day, you are going to come up with a conclusion or opinion. So you need to check that the evidence that is provided is enough and supports that. The last one, the practitioner must be able to understand, must be able to identify and understand the assertions being made or being reported and the nature of engagement. So you need to understand the claim that they're giving you and the nature of the engagement. You need to understand the nature of engagement and the claim that is placed upon it. They must be able to do that. Right? The practitioner must assess the risks, or exposure on the subject matter. They must assess the risks or exposure on the subject matter. The practitioner must also state any reservation about the subject matter. If he has any reservation about the subject matter, he needs to state. The practitioner should state any reservation about the subject matter. The practitioner should state any reservation about the subject matter. The practitioner should state any reservation about the subject matter. The practitioner should state any reservation about the subject matter. The practitioner should indicate if the report is only for specific use. It should indicate whether the report is intended for specific use or for general use. At the end of the day, remember there is a high risk being that it is done by someone else, then you give conclusion. You need to tell them that this report can only be used for the bank purpose. This report is only for tenders. This report is only for the owner, so that you are safe. Otherwise, there is an audit risk. Now, I want us now to look at audit risk. I mentioned about audit risk. But before I go to audit risk, I want us now to look at two more things in topic number 1, and that is the types of assurance engagements. Then we look at the audit risk. We talked about examples of assurance engagements. Examples of assurance engagement. Number 1, we have audit of historical financial statement. Audit of historical financial information, which we call statutory audit. Number 2, we have review engagement. Number 3, we have system assessment. Number 4, we have compliance audit. We have compliance audit. These are examples of assurance engagement. Then we also have examples of non-assurance engagement. And these ones we have, the first one, we have bookkeeping, which is the normal accountancy. Number 2, we have compilation engagements. We have number 3, agreed upon procedure. And then we have filing of tax returns. Filing of tax returns. Filing of tax returns. I repeat the last one. So which one? Repeat please. The last one. Are you talking about the last one on the proposals? I talked about ensuring that the auditor needs to ensure, or practitioner must ensure, that he indicates whether the report is for specific use. They need to indicate the intended use of the report, whether it is for specific use or intended use. They need to indicate whether the report is for specific use or intended use. Okay, so these are examples of non-assurance engagements. We also talked about absolute assurance, and I said that you cannot be able to give absolute report, that is 100% or a perfect report, because of some reasons. Those reasons we call them limitations, or we can call them reasons why the auditor cannot give 100% or absolute report. Limitations of audit engagement, limitations of assurance engagement. The first challenge is that we use sampling criteria. Whenever you're using samples, in order to use sample, we call them vouching. We call them vouching. That is the audit language. You vouch. Whenever you're using samples, you know that sample does not represent the true population. It cannot represent. Whenever we have election in Kenya, for example, Evans, we have some pollsters. They will come and do polling, and then they say that according to them, Nairobi area supports the opposition. But on the election day, things are different. But they will say that Kenyans are giving particular candidate a certain percentage. But on the election day, a different thing. That means that they were sampling. Unfortunately, the samples they picked were pro that particular candidate. Otherwise, the total population, the overall population have got a different view, or a larger part of population have got a different view. So the fact that in audit we also sample, we don't audit 100%, there's a problem. You can't be sure. That one that you have audited does not represent everybody's mind. Number two, nature of the subject matter. Nature or characteristics of the subject matter. You see, like for example, when you're auditing SACCOs, we have different types of SACCOs. There is SACCO that is formed by people from a certain employment area. Maybe there are people who are working with breweries. So breweries have got SACCOs. Those are employees who get salary every month from breweries. We have SACCOs that belongs to Kenya Police, or we say police SACCOs. Those SACCOs also get salary throughout. We have the ones that relate to teachers. And then we have farmers. Now, these SACCOs have got different characteristics. The one for farmers, we have days for harvesting and the period for planting and all that. Now, you find that during harvesting, they are able to pay their loans very fast. If members take loan, they are able to pay during that time. Off periods, when they are not harvesting, they will be stuck. They will not be able to pay loan because there is no money. But the one for teachers will always get loans paid every month throughout the year because they get salary, they have money every time. Now, we have a standard that you want to use to audit the two SACCOs. Now, one SACCO has got a different characteristic from the other. How do you use the same standard to be able to evaluate and measure and say that this is the best performing SACCO? It will be biased. It will not be fair to compare them using the same standards for measuring their performance. You'll end up saying that the one for agriculture does not perform well only because you went to audit during the time when they don't have money. We are saying that because of that, the nature of subject matter keeps on changing. If the subject matter here is the circle that you're auditing, then you'll end up giving a wrong conclusion or being biased to the other. The other one, we have inherent limitation. Inherent limitations of control, of internal control system. Inherent limitations of internal controls. There are things within organizations that you cannot. There are weaknesses within the internal control system in the organization that can make the report be not true or be misstated, which you might not even realize. You'll end up saying that the report is okay, but there are things that are within the organization that wenyewe themselves they know. For example, we can be having a strong control system, very strong control systems within the company, but there is collusion between the management. They can, amongst the management, they can collude and authorize so that when you're auditing, for example, if it is loan, you'll find that everything has been done perfectly, only to realize that these people colluded. So from the start to the last, there is a collusion. So you don't find any error anywhere. You end up saying that this one is well done. It is only well done because everybody was cooperating to do the wrong thing. They were all cooperating to do the wrong thing. So you don't find a gap as an auditor. Collusion. When fraud has happened through collusion, you will not be able to detect easily unless somebody gives you a hint. You know, for example, a circle, you know what they can do? Somebody can open an account and then they agree. There are 5 people. So they guarantee each other. I take loan, guarantee, I get guaranteed by 3 people. They also take loan and we guarantee each other. At the end of the day, we take a bigger loan and leave. Now, when you look at the control, you wonder because the procedure is that there should be guarantors. And they actually did. But then they still end up living without the money being traced. So therefore, what is the weakness? The weakness is that they are guaranteeing each other and you didn't know that they are friends. They can live at the same time once. So that's a weakness in the control system that you could have not detected. When you're auditing, you will say that these books the loans are okay. They are all guaranteed. And all the guarantors have provided the required details. Only to realize that these guarantors were friends. They were able to collude. They took the loan with the intention of escaping. So you end up saying that the loans are okay when those loans are not okay because there's some information that only them understands. We are talking about such kind of limitations. So you can't be 100% okay. Those are part of areas that you need to check when we're talking about such kind of limitations. We also have another limitations, judgment, use of judgment. As an auditor, you are giving opinion, and you see opinion varies. And you wonder why lawyers argue in court when all of them went to the same school and they're arguing, saying different things. These people are all learned, they call each other learned friends, they went to the same school, they're using the same law, but they're arguing, and at the end of the day, one person will win because of the opinion. Whenever we have opinions or we have to judge, we can end up being biased because of our moods, because of our viewpoint, because of our understanding, and even judges. The most interesting thing is that even judges, we have a bench of 5 judges, and then 2 are on one side, 3 are on one side. Why can't they be together? Now that they all listen to the same case at the same time, they went to the same school, they have the same evidence. Why are they splitting? Then it means that law is fake. There is nothing real in law. Because if those things are correct, then we need to just have them supporting one side, because that is the correct position. So we are saying that whenever there are judgment, there are always biasness. And so because of our biasness, we can end up giving what favors one point and not the other.